So I'm excited to get us started with the foundation of accounting. So everything starts with our accounting equation. So as we look at our assets equals liabilities plus owner's equity equation, I want you to keep in mind that everything in accounting starts here. And so the better you are at recognizing and identifying this relationship, the easier the upcoming tasks and knowledge that we build upon will be. So keeping that in mind, let's dive right in. Now, I want to mention a couple of things real quick related to this equation. So first of all, our equation is assets equals liabilities plus equity. Now, anytime we have owner's equity, this is speaking to a sole proprietor, meaning one owner, or a partnership. Okay. That's important because whether we are talking about a sole proprietorship or a partnership or a corporation means that our equity is structured a little bit differently. We're primarily in this class going to focus on what's called stockholders' equity. Now, in stockholders' equity, this is for corporations. And this is important because if we have a corporation, we actually have two components in this equity section. Okay. And those two components are going to be common stock and retained earnings. And that's going to be important for you to be aware of as we move forward. So just a couple of quick little notes about that. Now, as we're learning debits and credits, one thing we always have to keep in mind is, first of all, keep the equation balanced. That means that the left side must equal the right side. And we know that through the equation, assets equals liabilities plus owner's equity or stockholders' equity. The second part of this is that debits must always equal credits. And in the accounting world, that's how we record everything that happens. We never record it as an increase or a decrease. We record it as a debit and a credit. And now remember, debit means left and credit means right. So as you think about that, as we look at the T accounts, we have debits on the left, credits on the right, and that's how we abbreviate them. Debit and credit. Debits on the left, credits on the right. Debits on the left, credits on the right. Okay. Now, that does not change for any of our accounting equation elements or our accounts. So for example, if we're talking about cash, this cash is an asset, so the debit is on the left, the credit is on the right. But even if we're talking about a liability, something like a payable, our debit is on the left and our credit is on the right. It's the increase or decrease that changes. So if you look at this, everything on the left of the equation is increased on the left by a debit, which in turn means it has to be decreased by a credit. Now that switches when we move to the right side of the equation. Okay, so since liabilities and equity is on the right, they're going to be increased by a credit, but decreased by a debit. And the same here. Now, if we can remember that as we work through different transactions, different occurrences in business, and how those get recorded, that's what we are attempting to do, is identify the account. Is it an asset, a liability, or an equity? And do we need to increase the account or do we need to decrease the account? And that's the foundation of everything we're going to be learning. Now, one little note I want to throw in here for you. When we look at equity, stockholders' equity, owner's equity, I want you to keep in mind something for me, okay? Now, with equity, equity is going to contain our revenues and our expenses. So, as we look at revenue, revenue is an equity, okay? And revenue is also increased with a credit, decreased by a debit. Now, expense is a little different. Expense is also an equity, but it is a contra equity. So what contra means is really, I want you to think opposite. And so expenses are actually increased by a debit and they are decreased by a credit. Now we have to flip that, if you will, because when we think about the profit equation, revenue minus expense equals net income or profit. What we're going to be learning is that as revenue goes up, equity goes up. But as expenses go up, equity goes down. What decreases equity? Well, it's a debit. Now, that's a little bit challenging of a concept for students to really start understanding from the very beginning. And so we're going to do some practice with that. And we're going to talk about this. We're going to apply it actually to your additional exercise, and I'm going to use number 3. So if you haven't, go ahead and go to that additional exercise in Canvas. And I want you to try to practice with these. But what I'm going to do is I'm going to come back in the next video and I'm going to walk through what the accounting equation looks like for each one of these items.